Good morning, everyone. This is the sixth day of our six just 20 minutes lectures. So we'll be completing, as you know, we'll be completing in 15 days the entire subject of direct taxes using 30 pages only. Okay. So in the fifth day, we did income from other sources and dividend income. We'll also be doing further of income from other sources, section 56 to 10. Okay. Those of you who have already bought the memory book, you please write 5 points here. These are the checkpoints. If these checkpoints are satisfied, then only 56 to 10 is applicable. Okay. The first checkpoint is check the receiver. Right? Check the receiver. So if you have written check the receiver, now if the receiver is any person, then 56 to 10 will be applicable except when a receiver is receiving by a trust 1023C trust or by on the occasion of marriage of individual. Is marriage anniversary written here? No. Is birthday written here? No. So if a receiver receives on occasion of birthday, 56 to 10 is applicable. If the receiver receives on occasion of marriage anniversary, then 56 to 10 is marriage 56 to 10 is not applicable. If the receiver receives under a will or by way of inheritance, it is not applicable. Similarly, if the here we talked about receiving from a trust 1023C trust. If received by 12A 12AA trust, then also taxable 56 to 10 will not be applicable. So first point is, speak with me, check the receiver. First point is check the receiver. Now check the giver. Giver, the main element in giver is relative, the definition of relative. So if the giver is a relative, then 56 to 10 is not applicable. Okay. Also, for the receiver, if the receiver receives by way of transaction not regarded as transfer under section 47, if you remember, 4, 5, these two are amendments, holding to subsidiary and subsidiary to holding. If given and the asset received is below market value, the consideration is less than market value, then 56 to 10 would have been applicable, but because of this exception it will not be applicable. Okay. Second point, right here, check the giver. First point is check the receiver. Second point, right, check the giver. Okay. If giver is a relative definition of relative is, look carefully. Okay. There's some high level concept here. The relative, the definition of relative is, for example, Mr. A is me. For me, my spouse is a relative. Okay. Then there's a box. Please note that there's this box. Okay. After this box, both both mine and my spouse's brother and sister are my relatives. Okay. Both my and my spouse's mom and dad are my relative. Both mine and my spouse's lineal ascendant and lineal descendant are my relative. But mom, mom's brother sister, dad's brother sister of only Mr. A is Mr. A's relative. Okay, so if you remember this chart, the first is the primary thing is Mr. A, Mrs. A, a box, then brother sister, then mom, dad, lineal ascendant and descendant. But only Mr. A's mom's brother sister, Mr. A's dad's brother sister are their relatives. Okay, and of course spouse of any person mentioned above. If the receiver, if the giver is 12A double A institution, 1023C institution like we mentioned here and here, it will be exempt. So the basic 2 points are check the receiver, check the giver. Okay, now the third point. Now 56 to 10 provides that if you receive an asset or cash below FMV, for cash FMV is the amount. So if you receive cash free of cost and it exceeds 50,000. So if a cash received is 51,000 on occasion of birthday, is it taxable? Yes. Birthday is not covered here. Okay. So if 51,000 is received by way of gift, is it taxable? Yes, it is taxable. How much? 1,000 or 51,000? Entire 51,000. So the third point is, if the difference exceeds 50,000, entire difference is taxable. Repeat with me. If the difference exceeds 50,000, entire difference is taxable. You getting? Yeah. Write down the third point. If the difference exceeds 50,000, entire difference is taxable. Okay. Now this is the second. The first limb is for cash. The second limb is for, it's for property, and that too movable property. Immovable property is land, building, or both. And like we mentioned in 50C and 43CA, 5% basic benefit to the assessee, that is also made available under section 56 to 10. Okay. If stamp duty value exceeds 105% of sales consideration and it exceeds 50,000, entire difference is taxable. Again, entire difference is taxable. For movable property, the fourth checkpoint is write down asset should be a property. Definition of property. Write down definition of property. Why I'm telling you this is because the definition of property under 56 to 10 is not inclusive. It's exhaustive. It provides that sad EPJ, like we had a discussion for Kaplins, sculptures, archaeological collections, drawings, any work of art, paintings, and jewelries. These are, of course, property as per 56 to 10. In addition to that, shares, bullion, shares and securities and bullion are movable property for 56 to 10. Okay, so 56 to 10, the definition of property is very important, because if in the question it provides that Mr. A provided free of cost to Mr. B a watch, is it taxable to Mr. B? Has Is watch covered under the definition of property? No, not taxable. Clear? Yeah. And the fifth checkpoint is per clause all person. Per clause all person. You can have a look at my main book, in that I mentioned example for per clause all person. For example, I received 50,000 of movable property free of cost. For example, 50,000 1 rupee of movable property, rather 50,000 of movable property and 50,000 free of free I received cash. 50,000 and 50,000, it comes to 1 lakh. Is it taxable? No. Per clause all person means, for this clause I will see from all the person I have received. For this clause I will see all the from all the person I have received. Then I'll check whether it is exceeding 50,000. Not that I'll combine both these clauses. So fifth checkpoint is, write down fifth checkpoint is per clause all person. If you want to have a look at my main book, last example is specifically covered for per clause all person. Okay. Now we come to clubbing of income. Clubbing of income background is Mr. A transfers to Mrs. A, saying that she's my relative. I'll transfer all my income generating asset to Mrs. A because she has lower income, hence will claim benefit of exemption, basic exemption. Income Tax Act says wait, it's not so easy. You come under clubbing. Clubbing is, of course, to prevent evasion of taxes. So transfer of income without transfer of asset, it is to be clubbed. Write it right here, club. Transfer of income, how is it possible? So for example, I am owning debentures. While mentioning in the policy documents, I mentioned that the interest is to be credited in my wife's account. So if that's the case, it is, am I transferring the debentures? No, debentures are held in my own name. PAN is mine, but the income is transferred in the hands of my spouse. That will be income, transfer of income without transfer of asset. It will be clubbed. Okay. If asset is transferred and it is a revocable transfer, it has to be club. If at it, you have it, write it here, club. If asset is a, if there's a transfer of asset and asset and transfer is a irrevocable transfer. Mind it, irrevocable transfer is that I cannot revoke during my lifetime. Okay, so what I'll say, what the income tax says, that it will not be clubbed normally, but some relationships. So other cases, write it here, don't club. But some of the cases, the income tax act says that you may not be transferring it for, you may be transferring it irrevocably, but there's a element of tax evasion, so we'll be taxing that in your hands, in the hands of transferor. For example, right, this is transferring directly or indirectly to spouse or daughter-in-law. Transfer to spouse and daughter-in-law. Okay, so the main section is 64. For this it is 1 4. Write it here. For this it is 1 6. For this it is 64 2 for HUF. This is for HUF. Okay. Transfer to spouse. Now you'll remember this with the help of images. Transfer to a spouse for inadequate consideration. If this would have been this amount, it would have been adequate. Since only half amount is received, for inadequate consideration and not in connection with agreement to live apart, then it will be clubbed in the hands of transferor. Other cases club. In case of house property, section 27 comes into play. Section 27 provides that if a person transfers to a spouse for inadequate consideration or in connection with, or not in connection with agreement to live apart, the transferor will be deemed to be the owner of the asset. Meaning that the transferor, that is, for example, a person, a man, will be deemed to be the owner. Okay, so for house property it is deemed owner. Write it here. For house property, deemed owner. And for this, right, for others, club. There's a logic, simple logic under income from house property. If a person has two